Actually, it's a very topical point and a question which has brought a lot of interest. In fact, if one were to go a little bit in history, the FLDG guidelines actually stemmed out of practices which were happening in the industry. People are actually set in because of the partnership between the fintechs and the banks, and to see that the loss reduction is actually taken care of. Something similar to the FLDG actually started off. One of the things which the RBI generally does is that as long as these are small initiatives and they are not risky, the RBI doesn't actually come out with huge frameworks. But when they found that the FLDG is going to be the way of the future, it has systemic risks and etc. If you recall, more than a year ago, it was announced by the RBI that the entire FLDG will be actually comprehensively reviewed and that the RBI will come out with the framework. The industry has been waiting with the bated ambition as to when this will come. So the timing of this release is actually very appropriate. I'm aware that a lot of fintech entities and those who are in the space, including those who are the loan aggregators and others who perform this function, they are actually waiting to see what is happening, because the FLDG is growing more so because there's a lot of what I call it as at endpoint loan grievance. For example, in the retail space, people go to buy some product or some consumer durable, you get a loan. What happens in case there is a loss? And typically non-performing assets or some losses are always there. So taking all this into account, this is very timely. That's the first one. Second one, it'll also be good to note that the FLDG guidelines are the outcome of a lot of interactions, a lot of feedback, a lot of suggestions which came from multiple players. It could be the industry which is doing it. It could be the banks which are partnering with them. It could be the other financial institutions, as also the end user customers. A lot of deliberations have taken place. RBI has had undertaken a consultative approach. And finally, taking into account what are the best practices to ensure that the systems are deficient, the risk reduction is there, and that there is no systemic risk coming, the FLDG guidelines have come in. The initial responses which have come from the industry actually show a large amount of positivity. It's been well received by the industry. And to my mind, the FLDG is actually going to be a catalyst which will ensure that this sector takes off very well and the taking off is smooth, and that this as a process will become integrated with the loan processing or the credit process itself. So on overall, it looks to be a very good step, received well by the industry, and therefore now it's a question of how it is going to be implemented. I think it's a good beginning for this entire space, which is going to be the future of the way retail credit is going to happen in the country. See, there are two things which one has to actually take into account. The first one is the size and the geographical spread of India as a country. There's a huge potential. In fact, one of the biggest challenges, the advantages that we have now is the actual younger population, the population below, let's say, 30, 35 years. These are the people who have got what is called as personal disposable income. That is money that they can actually spend. This money that is spent results in increased consumption. If it is increased consumption, it is increased production. Increased production ultimately results in GDP growth for the country, which is good for the country, and that is what is required to bring out the world out of recession. So from that perspective, potential-wise, it is great. Second, capability-wise, one of the things that has developed in India is that what used to be at certain localized clusters, typically metropolitan cities, certain cities alone where the growth used to happen. Today, the geographical spread is spreading across, whether it is one of the unfortunate beneficial outcomes of the pandemic or not. People are now dispersed, and therefore initiatives which are actually aimed at providing solutions, providing fintech-based solutions, and even others are now dispersed across the country. Bangalore used to be the fintech capital, but today other cities like Gurgaon, Noida, etc. are also picking up, and also some of the tier 2 and tier 3 cities. So my view on that is that it is actually a healthy trend that it is happening, one. Two, the more important thing is today with communication and networking technologies becoming very mature and adept, there is no need actually to worry about where the actual services are from and where the user is there. So this healthy marriage actually sees that the geographical distances are shrunk. The last point on that is that the industry has also understood that cooperation is necessary, and therefore we are now finding fintech players cooperating with the financial service providers providing some support to them. So this mutual symbiotic relationship is something which is actually going to result in the next version of fintechs helping the financial sector, which will go great. It's actually a very positive. The role of the regulator has been one of, at least as far as this sector is concerned, providing facilitation. See, the regulator ultimately worries about systemic risk, that is risk which will have an impact, and two, about the faith and trust which the entire citizens have on the systems that is there. If you talk about fintech, it is basically about delivery of services which ultimately have an impact on financial products and systems, and therefore the user of the system should have total confidence in this. That is something which has been assiduously built up by the regulator in the financial sector over so many years. So what does the regulator want? The regulator wants to see that the systems are safe, they are healthy, they are secure, they take care of the requirements of an ordinary person. So on those, providing the frameworks, the regulator will continue to do. As far as the industry and the innovators are concerned, the regulator also wants to provide a supportive role. So it will do a lot of facilitation. I'm sure you'll be aware of initiatives like the sandbox, etc., where the regulator provides a supportive environment. So to sum up, it will be a facilitating environment which is aimed at providing stable, reliable and dependable financial services. That's how the regulator will work in the future.